Forward, Jay Bala of Cash the Chaos is joining us on this leg of the show. Jay, great to have you on the show as always. We know you've been sounding out that cautious note for a while. I mean, maybe the slide hasn't really started, but yes, the market isn't going up in a hurry either. Tell us, what do you make of this extreme tight range on the Nifty last few sessions?
Yeah, good to be here, Surbhi. I warned on the 10th of January that not to be without a put protection for the portfolio between January and the middle of February. And we had the Adani imbroglio play out in late January, and I had very carefully used my words saying that this will be the starting point of shock and awe. And so we had seen the start, and we are probably moving to the next stage of that. The 18,135 high we saw a couple of sessions ago, I think that is putting a ceiling for the market's up move. And we are most likely to see an accelerated decline pickup for the market. And 17,720 would be the confirmation point, but already the market form on intraday basis is saying that that the next leg of the decline has already begun. And I won't be surprised if the market takes out the budget day low the next 3 sessions.
Okay. And you're expecting this to happen, this accelerated decline? I mean, timelines matter, right? You're expecting this to play out in near term, Jay?
Yeah. See, time is always approximate, and it's the most difficult component to understand and predict. But as long as price behaves in an expected fashion, whatever our thesis is, that still continues. So from a medium-term perspective, I've said this market has to go below the June 2022 low. And from a short-term perspective, the supports are about 17,720. After that is about 17,353, the budget day low, and then it's about 16,750.
All right, Jay, you're sounding very, very cautious. Let's get a couple of bullish aspects on the screen then. I believe a couple of stocks you believe will look up. One is IEX, that's been a big underperformer, but is showing some traction, outperforming in an otherwise wobbly market. And the other one is JK Cement. Well, fundamentally, things could look up. We had the management earlier today, and they were sounding very, very optimistic on volumes as well as on EBITDA per ton. Give us your call on both these 2 stocks.
Yeah, these two stocks seems to be moving upstream, and IEX, I think it will protect 132, and it's set to rise to somewhere close to say 180 or thereabouts. But don't be too optimistic on achieving the targets. But as long as you're seeing some profits, book along the way. And JK Cement is also looking quite attractive from a very short-term perspective. Possible potential to rise to somewhere close to 3,400, I would believe. But it has to protect 2,500 from a short-term basis. So both are looking positive from a trading basis.
Jay, which are the weakest looking charts according to you?
Yeah, I would say, I've been saying the banking index was going to be the contributor for the next leg of the move, but the pressure is building in the private sector banks. Some medium-term big patterns are forming in Nifty private banks. But surprisingly, Nifty Pharma, I expected it to hold above 12,000, but surprise weakness building up in Nifty Pharma, and if it were to close below 12,000 on a weekly basis, I think there is a further 20% drop potential for the Nifty Pharma index, and a stock like Sun Pharma is registering a double top. So caution there. But as a sector, as of now, IT is still bullish, but if it must hold 29,500. If it does hold about 29,500, there is a possibility for the Nifty IT index to rally to 34,000. This could be in sync with the Nasdaq, which I think is having potential to rally up to 13,000. So but 29,500 is critical. If Nifty IT goes below 29,500, there is a possibility that this rally has petered out.
Prashant, just hearing Jay, I went back to once again read the details on Putin's speech and the big headlines coming out of it. So basically, the title of the piece on CNBC.com is "They Started the War." That's the kind of rhetoric we've been getting over the last 24 hours. It is the 1-year anniversary, and maybe hopefully it just sort of boils back down once this anniversary is over. But you never know where the next flashpoint is really coming in from, right? I was looking at the dollar as well. Spiked above 104, and then today US market resumed, so we go back to looking at the 10-year yield, the dollar, and just see what risk sentiment is like. Jay, since you've been cautioning us for a while, in case your base case comes through, then where's the hiding space in the market? Health stocks, healthcare stocks, anything in pharma, anything where you can kind of pull most of the money out and then put it over there?
Yeah, at the moment, other than IT, nothing else is offering in a hiding space, Surabhi. I was expecting pharma to perk up, but in fact, that is looking like that might even break down. Even the outperforming stocks like Zydus, they might also start to cave in if Nifty Pharma were to close below 12,000. Cash and dollar, that's the hiding place.
Would you recommend increasing the cash component of your portfolio?
Oh, definitely. I would say, you must be in cash somewhere close to 75 to 100%. And, unless you have have the ability to pick up, stocks that can swim against the stream, you're better off going to 100% cash.
Okay, thank you very much for that, Jay. Thank you very much for joining in. Get into a break. We'll come back. 5 minutes left for markets to close. We'll get you the closing rates.